Hey everybody, welcome to another episode of Selling Life and Annuities. I'm Randy Pierson, Executive Vice President for Sales and Distribution at Gordon Marketing, and with me today I've got Ray Parman, our Life Insurance Sales Manager. And today we're going to talk about a subject matter that I personally feel is one of the most neglected spaces in the insurance industry, and it's long-term care in general, and in specific we're going to talk about state mandates and what's happening in that space. So Ray, welcome to this episode. Elaborate on that. What is happening in this state mandated LTC scenario?
Yeah. So we have some states out there in the greater union that are rolling out publicly funded long-term care programs. So as you can probably guess where I'm going with that, Randy, is the fact that that's going to be funded in the form of extra taxation on residents of these particular states. So there's a concern with the taxes, and it's something that I feel like advisors need to be aware of and need to be aware enough of this to get out ahead of it with their clients.
All right, very good. And let's understand, what's really at the heart of this, what's precipitating it is, people are living longer. Mm-hmm. And medicine is becoming better at keeping people alive, to be blunt. And those folks who are of an advanced age and still around, but have medical issues that prevent them from living on their own or maintaining care by themselves, have to seek help, right? Yeah. Whether that's assisted living or a long-term care facility. So let's get, so what are some of the states that have really dove into the mandated area, and or maybe what's a state or two that's coming down the pike?
So, I'll paint the picture. So last year, about a year ago, the state of Washington rolled this out. And so what this turned into was a fire sale of long-term care products, that being linked benefit products, traditional products. Not that there's a whole lot of carriers that have a traditional long-term care product, but there are a lot that have linked benefit products out there. So it was either get a privately paid for long-term care policy or be subject to the taxes that be to participate in this state mandated long-term care program. So needless to say, there was a bum rush on some of our carriers with people wanting to get long-term care products put out there and issued. And, needless to say, carriers like Nationwide, they have a really, really nice linked benefit product, but it's taking them up to 9 months to issue a policy. Wow. So no matter who you were or how important you think you were just like everybody else in the line, waiting for a policy to be issued. So there's a lot of, logistical concerns with that too. But so now we have other states. California just rolled theirs out. The other two states that are about to do something like this are Pennsylvania and actually New York too. So there's that, and there's about 12 other states that are considering legislation like this. So if you're an agent out there and you have clients in some of these states, you need to be aware of this.
Yeah, and if you're an agent out there and you'd like to know who some of those other states are, and or how your state and or your practice will be impacted by some of this legislation, they can reach out to you, right?
Absolutely.
For those details.
Yeah, I have a white paper actually that gives a more in-depth summary of what we're looking at here, goes into the ins and outs of it, some of the implications too. I mean, I don't know if you saw this, but people are looking at anywhere from a 60 basis points up to a 300 basis point tax penalty if they don't participate in that. Wow. So not that I make $1 million, but if I did, I could be looking up to potentially a $30,000 tax hit just because I didn't procure a long-term care plan for myself, and I'm relegated to the state's plan.
And I can only imagine, right, if I was a novice or uninformed operating in the space, that the ability to choose my own plan and my own carrier, basically get coverage, obtain coverage on my terms, that would afford me more options and probably better coverage.
Yeah, right? Yeah. more options, better coverage, better control of where you receive your care from too, nonetheless. And I think anybody, rich or poor, wants to have an opportunity to control where they, receive their care from, and it can be done with one of our many, many carriers and their products.
Absolutely. So if an agent out there, if we've piqued their interest and they recognize that long-term care is a major concern for consumers out there, reaching those advanced ages, and they want to learn more, how can they contact you?
Yeah, shoot me an email, ray@gordonmarketing.com. You can call me here at the office at extension 107, or you can even call my cell phone, 317-696-8203. And all we're trying to do here is give everybody a even more reasons to go out there and put this in front of their clients. We can help usher these cases in. A lot of, more affluent clients, they might say, hey, I'll self-insure. Well, we can self-insure, but with leverage with these products, and now help them avoid some of these tax headaches that they may run into as well.
And stretch those dollars, right?
Absolutely.
Why deal with uncertainty when you can have certainty and likely get a bigger bang for your buck?
Yes, sir.
Per se, right? So listen, once again, if you're an agent out there and you'd like to learn more about this long-term care space and the state mandates, please reach out to us. We'd love to make you a better informed advisor to serve your clients. But for now, unfortunately, this episode of Selling Life and Annuities is coming to an end. I'd like to ask you to do me a favor and click subscribe at the bottom of the video, as well as the notification bell, so that every time we come out with valuable information that'll impact your practice in a positive way, you'll be sure to hear about it. But for now, on behalf of Ray Parman and myself, happy selling.